lot size, what is it called, number of pips calculation and all that. So I want to teach you one thing that is common in the market, and I want to start by that by teaching you what they call supply and demand. They believe that the market works by supply and by what you call demand. So what it means is that whenever you see a chart like this, uh, you start marking your lines to show supply and demand. I don't believe supply and demand can be seen in the chart, other than the fact that if there is a demand for this and the supply, that is what has made the price to rise, and the supply is lesser. This is gold. It is one of the most volatile assets on the market because of its value and because of its price. So if you look here, you will see that on this line there are so many um, price projections that get here. This is one, this is two. On this point, it has three, four, five. So we believe that the market has created a support here for here. But prior to this time, this is where the market could not break through on these two occasions of trying. I'm using a 1 hour chart to tell you. But I want you to understand this at the back of your mind, that we say price is fractal. When we say price is fractal, it means that if I change whatever you see in a 1 hour chart can also happen in a daily chart. Whatever you see, like what I just explained now, which is this point, you see that 1, 2 attack on this price point, then 3 it goes above it, then 4 you see it reacts again, it does not go beyond it. Then we're waiting for the time when it will react. At this point it held, so at this point you can see that price always reacts here. So like I said, price is fractal. What happens even on the what is it called, even on the 15 minutes, you can see that same thing that happened can still happen again. This is 1, 2, 3, 4, 5. There are so many reactions to price. It broke through, came up, came here, rejected it again, started coming down, got here, rejected. So some persons trade off this thing as what they refer to as supply and demand, but I don't see it as supply and demand. I call them support and resistance. They are points of support. This is support, price is resting on it. This is resistance, it is resisting it. So one of the conventional rules we understand in trading and in technical analysis is that when price, an old resistance like here, resisting price, when it breaks through at some point becomes support. So it is understandable, and the rule of thumb, that old price resistances finally become support, because there is a rule that the market works on the law of numbers. If you check here, see 1559.11, so it is assumed that this place might be rounded up to the next figure, which might be 1560. So the 1560 might be a key value or an important number. If I move it now to, if I label it as 1560, you see that it looks like it becomes, look at it, price got here, rejected it, came back here. So sometimes it's not just that it will just get there and be like this one. You see, it got there, rejected, it showed this candle, which we call a doji or an evening star, or it shows the sign of a completion of an uptrend or a weakness of an uptrend, and started going down. So sometimes it might be clean like this, but most of the times it is always choppy like this, chops around it, then moves in the direction. So you see, now we now get to another point. So it is understand that big figures in the market are actually areas of supply and demand. So let me check this 1570. The 1570 price map might also be, you look at it, 1 is reacting, 2, look at it, it reacts here, 3, and look at this long week of rejection here on the 1 hour. So like I said, price is fractal. Whatever happens here can happen on a 1 minute time frame, but the dependence, why as traders we believe in long-term analysis, is that when I go to what happens on the daily, for example, the daily has shown me that this is bullish. So what am I looking for? I'm looking for buying positions. So I am not looking for selling. Unlike when I come to 1 hour, one minute can, sorry, when I come to 1 minute and I'm making my analysis of one. You know, that's one of the craziest things I've ever seen people do in the market. I used to do it before, but once I was blind, but now I can see. So my own amazing grace testimony is that I look forward to the one development of price on the daily time frame only. not on any other time frame. So like I said, I want to start teaching us about support and resistance. So one of the things you must understand is that support and resistance, wherever price, so you must be able to train your eyes to mark where price forms a confluence. You see this is a rejection here, this is another one, this is another one. Price moved down, it came here, rejected it again, moved down, this time it broke through, it didn't have enough sustenance, it broke, it came down again. So this is obviously, it could be a resistance point, what we call resistance. This thing is just price faking. If you move to the H1 time frame, you see that there was a rejection candle there. Yes, this was what I was telling you. So price got here, rejected, and started going down. So now look at it again. This is the H4 candle, 4-hour candle. You see that there is a rejection. So it was formerly resisting price at this point. It couldn't go, but immediately price broke through, it came back and found support here. So we call it this a support and a resistance line. So this place could also be a support and resistance. So that was what I was trying to show us. It went there, poked through it, and rejected it. So if we go on a daily candle, you could also see how it performed at that point. So let me see if I can find the context of this. Now look at the context. It rejected here. When it rejected here, it now started going back. So when we say price is fractal, it means that, for example, the same thing that happened in the 1-hour candle can also happen in the 5-minute or 15-minute, or this is daily candle. See price rejects here, goes up again. Let's see if it will come back here at some point to react there. Let's see if it will come back. It did not come back, price kept going. That's why we say gold has been on an upward trend. So anybody selling gold in the long run is making a whole lot of mistakes. So we feel it's an asset that we can correlate as this. So you see, this is also rejection. This is also rejection of price at support. So it held the support. When it broke through, when price breaks through a support, it becomes a resistance. The same thing when price breaks through a resistance and rests on it, it becomes support. Let's see if this was an old resistance. You see, there was a resistance here. It broke through here, became here, resisted it, and started going down. So you see, it was also an old resistance. 1, 2, 3, 4. 1, 2, 3, 4, 5, 6, 7. Broke through, came here. Instead of being support, it broke down again. So some persons trade off this thing. So they want to see market reaction. For example, if I come here and I see this bullish candle, rejection, bearish candle, 1, 2, and I can short here, put my stop loss above here. I'm wanting to go down, and when I put my stop loss above here, I don't move my stop loss, aiming for maybe a 2:1. Let's see if I short here. This is 56 points, so I should be able to get 112 points, right? Let me see if I got it. I didn't get it. Okay, what I got was 102, so reasonable enough. I could say 1:1.5, or I could short here, put my stop loss at this old low here. Yes, at this old low, believing that price will get there, and of course price got there and hit me. So that is what it is. So old resistances turn to supply when price has broken forward. Old supplies, as in this case where price held, could turn to resistance. Let me show you where a classical example of where an old supply turned to a resistance. I'm looking for a downtrend, and of course it is in downtrend. Yes, it's in downtrend. I'm going to find a downtrend where an old supply became a resistance. What I'm just seeing here is old resistance became supply. This was where price resisted in it. It broke through, came here, it held, became supply, came down, started going up. I told you most times it's usually choppy, but it's not actually a line, it's actually a figure, like what we say, between, let's say, between 50 naira and 75 naira. So that benchmark. But usually some persons would tie it up to a round figure like 20, 0.20, 0.80, 0.00. These are major lines. Let me move this. If I say 1300, so you just have to understand that, of course, with time you, so 0.001300, you see, it becomes, it's a major resistance line. That is how it works here in this market. I think I'm done for this first part. I'm going to show us others. So if you have questions on supply and demand, make sure you ask.